Welcome to the live stream, everybody. Silver dealers quietly flipped their buyback this week, and it's got silver stackers like me, and definitely you're feeling the same way. Our heads are spinning. Let's get right into this. $91.63 per ounce. That was the confirmed COMEX silver settlement level reported on February 25th. And that single number, $91.63, really keep that in your mind while I explain this to you. Because that single number sits inside one of the most structurally compressed technical zones silver has experienced since that January peak where we hit $121. Now, over the last 5 trading days, silver is held within a narrow stabilization band after the collapse of more than 31%. That collapse everyone is still talking about. And what happened is that was establishing a volatility regime defined not by expansion. No, this was tension. This is what's happening. It's tension. And really, this type of equilibrium rarely persists really beyond a week and a half, especially when silver has already demonstrated the ability to move more than $40 an ounce within a 30-day period. Can you believe I could even say that? $40 an ounce within a 30-day period. If you've been stacking silver as long as I have, or even if you just started 2 years ago, 3 years ago, the idea of a $40 move. Oh, if you're enjoying this live stream, I post this live stream daily. I host it at 9 p.m. Eastern every day, 9 p.m. Eastern. That's when I'm doing this live stream. If that works for you, please tell me in the comments what time you're watching this. Because if everybody's watching at a different time, I might switch the time. For me, 9 p.m. works. But let me know where you are and what time you're watching it, so I have an idea if I should stick to this time. Let's keep going. So yeah, $40 an ounce within a 30-day period. What makes this moment even more important is that silver is now trading nearly 25% below that $121 peak, while still maintaining the support that we need to go even higher. We still have that structural support. This is creating the precise conditions where dealer behavior becomes predictive rather than reactive. And I'm going to break this down for you in plain English so you really understand how these dealer buybacks are changing, and really most importantly, how you can look at the spot price of silver and understand where it's headed. So listen closely to this point, because this is where candle structure begins to reveal what dealer hesitation truly means. Over the last 120 hours, silver's daily candles have transitioned from wide-range panic bodies into narrow consolidation structures that average less than 40% of the range that we saw during the January crash. That's when prices swung $118 an ounce down to $76. That was intraday. Now, this contraction represents absorption, not inactivity. Absorption, because markets don't stabilize randomly. They stabilize when forced liquidation exhausts itself. Now, stay with me here, because this next insight explains why the 50-day moving average has become the single most important technical line in the silver market right now. The most important. The 50-day moving average now sits inside a recovery corridor that's formed after silver rebounded from its early February close. It was near $77, about $78. And that marked a recovery of more than 18% from its immediate crash low. That's a nice move. So while it's still remaining well below the speculative peak of $121, the dream, the new ceiling, this position really creates a pivot zone where every retest of the moving average represents a contest between the industrial demand, the institutional accumulation, big players, and what we're seeing as residual liquidation. Now, pay attention to this detail, because it directly determines how dealer spreads evolve. If you have not recently tried to sell silver to a dealer, you're going to be hit with a brick wall. And the brick wall is in the form of a $10 buyback. Where I live, that's the buyback. Meaning, if silver, let's say by next week, silver is hovering at $100 an ounce. You bring in 1 ounce of silver, you're only going to get $90. It's a $10 buyback. It's a $10 under spot. That's the spread that dealers are offering. Now, they adjust their buyback based on expected resale probability. Are they going to be able to move this silver? Can they do it? And when silver moves from extremely volatile to compression, just like the transition from $118 to that mid $80 range just days later, dealers widen their spreads. Not because they're being pessimistic. They don't think silver's dead, but really it's uncertainty. And this widening behavior reflects the recalibration that everyone in this market is going through. Lean into this. Check this out. This next pattern really explains why the cup and handle formation is now structurally visible. We're seeing it. And the cup portion formed when silver collapsed from $121 going down to that $70 to $80 zone in early February. And we got that rounded base rather than a sharp reversal. That's the cup, and that's what you want. The handle emerged over. Oh, if you're new to looking at charts, I'll just explain this quickly. Cup and handle is really how we see that there's a bullish pattern showing, and the price of silver is headed up. Right? That's what we're looking for this. So the handle emerged over the last several sessions because silver was oscillating below its key resistance, and it was maintaining support above the recovery floor that it wants. But this formation that we're seeing, it's not weakness. This is the equilibrium right here. Now, put this next concept into your mind and really, really keep it at the top of mind while I explain this, because it's going to make a lot of sense. Oh, if you're new to this live stream, I host this live stream every day at 9 p.m. Eastern. I'm breaking down the day's market. Well, today's a Saturday, so I'm breaking down the week's market. But Monday through Friday, I break down the day's market in silver, help you understand exactly what happened in plain English, so you know really where the spot price is headed, help you keep some cash in your pocket. That's my goal. Click subscribe if you haven't so you don't miss this live stream. So listen to this. This really explains why dealer frustration is at the forefront of these buybacks. This is how silver stackers are misinterpreting the sideways movement that we experienced. Because sideways price behavior is not stagnation. It's inventory transfer. That's all it is. And over the last 5 days, this past week, silver's remained within a structural holding range beneath any resistance. No collapsing lows. It's creating a compression zone where volatility has declined dramatically relative to the 45% collapse from January. And what this means is we have a reduction in volatility. That's what we want. But what it also tells us is that is a precursor to expansion, a precursor to some bullish pricing that we're headed for. And again, this really explains why dealer frustration is at the forefront as they flip on their buybacks, because dealers rely on turnover. They rely on stackers bringing silver in and at the same time, stackers buying silver. Can't be just one way. And when silver traded from $48 in November of 25 to all of a sudden $121 by January, what a spike. And that turnover accelerated because momentum created constant demand. But during the compression phase, this is where dealers start to feel some pain. Turnover slows. And slowing that turnover, that increases risk for the dealer. They're exposed. Now, stay with me on this because, again, back to the 50-day moving average. We've got the cup and handle structure, strong. The moving average represents equilibrium over approximately 50 trading sessions. That's what we look at, or roughly 10 weeks. That's what the 50-day moving average is. And that means silver's ability to stabilize above recovery levels reflects sustained accumulation rather than a temporary rebound. And this accumulation forms the structural base required for any future expansion. That's why the 50-day moving average is so important. Now, when we look at that collapse from 118 down to 80, and the volume surged because we got forced liquidation accelerating. But during the last 5 days of this week, volume has actually declined significantly relative to crash levels. And declining volume during consolidation signals an exhaustion by sellers. Not an absence of interest, but an exhaustion. Now, listen closely to this, because resistance determines the breakout probability. Silver currently remains significantly below the all-time high of $121, but it's well above its stabilization range that was established after the crash. And this creates a wide structural cup formation, that's what we want, with a handle developing just below resistance zones that we've seen this past week. That handle is exactly what we want because that is bullish on silver. That's exactly what we're looking for. Now, because dealer behavior confirms this tension that we see in the charts, it tells us two things. First, it tells us dealers are as silver stackers, we don't really need to be watching the spot price as much as we do. We should really be watching the actions of dealers, because what they do with their buybacks and what they do with premiums really tells us the strength or the weakness in the market. Just as traders and institutional players look globally, they look at China and they say, look, whatever the spot price is doing in the US here in the States, China's got a $10 premium. So that's telling us that the demand is strong. We could have a spot price headed down. We could be crashing in spot price in the States, but in China, they have a $10 premium. That's telling us that globally, the demand for silver is very strong. And it might be dropping, but it's a short period, it's a short window that's going to drop. It's going to come straight back up because those premiums are strong. And the big players, institutional players, industrial demand, that has not gone anywhere. That is still strong, and it's not stopping in any way. If you're getting some insight, some help from this live stream, let me know in the comments. Let me know where you are and what time you're listening. I host this live stream every day at 9 p.m. Eastern, and I'm open to changing the time. I just want to know what time you guys are watching, so we could all be on this live stream rather than everybody watching it sporadically at different points during the day. So let me know what time you're watching, and let me know if you picked up any silver this week, because whenever the price is going up, I know I'm not alone in this. My anxiety goes up. I start feeling anxious. I start feeling like, even with all this silver that I've accumulated, because I've been stacking silver for a very long time. I'm an old school stacker. I still feel like I'm missing the boat. And I know if I'm feeling that way, anybody who is only holding a few ounces in their possession, you guys are certainly feeling like you're missing. And so let me know if you're buying or if you're sold this week. Has anybody sold any silver this week? Because if you have, tell me, are you seeing the same thing on your local level? Because here where I am, this story is absolutely ringing true. $10 buyback price really hits hard. Just last summer, I was able to go to local coin shows, and I could pick up silver at 50 cents over spot, 50 cents over, generic silver. And look how much those days have really changed. Easily 50 cents over spot. And there's just a year ago now, year to date, the buybacks were closer to that. You're basically getting spot. Maybe people were complaining at, remember this? People were complaining at $2. Oh, the buybacks, $3 under spot, $4 under spot. That was offensive. Do you remember this? That was just last year. That was offensive. And now $10. Let me just tell you one more thing, and then I'll continue with today's notes. American Silver Eagles. Remember how shocked and offended everybody was when we had that? That was probably 18 months, 2 years ago. To purchase American Silver Eagles, the premium was about $14 over spot. And everyone, of course, myself included, we were shouting, "Stop buying American Silver Eagles. Stop, they're dead." We don't know why the premium is so high. Something's going on, but don't spend $14, $15 above spot for an American Silver Eagle. Now, today, right now, I end this live stream and I try to go buy some silver where I live. It's going to be $10 over spot. That's the premium. And so, right, silver, let's say silver's $105, $110 an ounce. It's going to be $115 or $120 an ounce with that premium. So it's just remarkable. If you're like me and you feel the same type of experience, let me know in the comments. Tell me if you're going through this too, because it's a really bizarre new era for silver that we're all living through. This is completely new. Just look, 2 years ago, I felt this way too. What's going on with silver? It is not moving. It's clearly manipulated in a way that needs to be changed. We were just digging in the weeds trying to figure out how to get silver to move in price again. Stuck between $22 and $30 an ounce. Everybody thought silver was dead. If you were stacking back then, you remember this. We right now, at the time of this live stream, we are absolutely in a completely new era for silver that I never thought it would really happen. I was never one of these guys. If you've been watching Pound of Gold, if you've been watching my channel for years, I've never been one of these guys saying silver's going to $300 an ounce, silver's going to $500. Well, I'm changing my song. I'm going to have to change my song because it is going to $300 an ounce. $500 an ounce would not surprise me. If that sounds hyperbolic, just look at where gold was at the turn of the century. Year 2000, 2001, gold was selling for $400 an ounce. And back then, we were shocked. We felt like, how can anybody afford $400 an ounce for gold? We're past 10x for that. 12x? Are we at 12x? I'm trying to do the math in my head. Right? So for silver to hit $500 an ounce, it's not that big of a shock. Let's look at silver trading between $76 to that peak of $121 an ounce between the 30-day window from January 30th till yesterday. That's a massive $45 range. And what it's doing is it's confirming that volatility has already entered an expansion regime before transitioning into compression. And this magnitude of movement, it reflects a volatility expansion of more than 58% from low to high. 58%. This is just unthinkable for this market. Really, what it is it's a scale rarely sustained without entering a stabilization phase that lasts between 5 to 15 trading sessions. It's about 3 weeks. Now, when markets experience extreme displacement, when we exceed $40 an ounce in 30 days, like we have, they typically transition into a structural pause. That's what we often see. And what that's usually defined by is reduced volatility and tightening in candle formations. Now, at the top of this live stream, I touched on what we're seeing in the candles, but listen closely to this next point because candle compression is the first measurable signal that silver is preparing for its next major move. Yeah, that's what you want. That's the phrase that we're all waiting for, the next major move. Over the past 7 trading sessions, the average daily candle, listen to this, the range of that daily candle. Oh, if you're new to looking at charts like this, just know the candle shows the low and the high. Just think of it that way. So the average daily candle range declined from approximately $9.84 per session, that was late January, to approximately $3 by yesterday, by late February. And that represents a volatility contraction of nearly 68%. So this reduction does not reflect reduced importance in this metal. It reflects stored energy in it. It's like buzzing. It's a spring that's pulled back and it's about to move hard and fast. Because historically, volatility compression, when we see that, when it exceeds 60% relative to prior expansion phases, that usually precedes directional resolution within just 10 to 20 trading days. It resolves. And that's what we're waiting for. We're waiting for that resolution. And stay with me because I'll explain where I think this resolution is going to hit. If you're new to this live stream, hit subscribe first so you don't miss it. I post daily. I host this live stream at 9 p.m. every evening, 9 p.m. Eastern, New York time. I break down the day's events in silver so you could understand it and you could really get a grasp on where this metal is moving to. So this next detail really explains why the 50-day moving average has become the gravitational center of silver's current structure. As of the end of February, silver's 50-day moving average sits near the midpoint of really the broader consolidation quarter between $77 and $94. And that's placing the current price action within 12% of its equilibrium. Now, this is what that tells us. When silver starts oscillating within a narrow band that's surrounding its 50-day moving average, if it's more than 8 consecutive trading days, really it indicates a temporary balance between institutional players buying up silver and the residual liquidation pressure that we expect. So listen as I explain this, because this is so key. Repeated interaction within this 50-day moving average. The 50-day is so important to understand the silver price. And this repeated interaction within the 50-day average, it tells us that we've got structural absorption. We have, just look at the last 10 days, we have silver testing its equilibrium zone at least 6 separate times it tested it. But it avoids sustained breakdown. It didn't go below key recovery thresholds. And that's what you want. In early February, it's stabilizing around about touching $78 an ounce. And each test represents really an attempt by sellers to regain control. And when I say sellers, I don't mean you and I walking into a local coin shop. I'm talking about traders. I'm talking about institutional players, industry, the pieces of this silver puzzle that really move the price. Each recovery represents buyer absorption, and absorption gradually removes available supply from circulation. Not just one big crash like some people imagine. This is gradual, and that increases the probability of this price going up. Now, lean into this point. Listen to this. The cup and handle formation, along with this 50-day average, it's now emerging with what provides a structural roadmap, really, for silver's next phase. That cup, the portion formed between late January, when we had that high of 120, and when it dropped down to $76, that's creating a cup shape, the bottom of the cup. It's a rounded base. It spans about 36 calendar days. And rounded bases of this duration reflect institutional accumulation rather than any speculative impulse. That means it's not people looking for a quick ROI. This is institutional accumulation. This is the industry part of the equation. Industry needs silver no matter what. Solar, AI, EV, all this tech that needs silver, they need silver, period. At this point, they can't even look at the price of the metal. They just need to accumulate silver because it's necessary for their industry. Good news for you and I as stackers. Good news for the value of this metal. It's going to keep going up and up. Now, when we get that rounded base and we get a sharp reversal, it typically resolves even within that. So even though the rounded base starts to look like it's a little jagged, it doesn't have to be perfect. This is an art class. It doesn't have to be a perfect rounded base. What we are looking for is the handle. And now focus closely on this next detail, because that handle portion of the formation, that represents the final consolidation phase before resolution. Over the past 5 trading sessions, silver's been oscillating within a tight corridor. And that's what you want. That's giving us that handle. It's less than $6 per ounce compared to that broad, of course, that broad $45 range. That's what you want. You want it to be hovering between $6 an ounce. And this represents, listen to this number, an 87% reduction in the price dispersion. 87%. That's a mathematical indication of compression. Because when we have a compression phase with the silver price, the magnitude will rarely persist beyond 15 trading sessions. And remember, trading sessions it's Monday through Friday. So we're just looking at a 3-week period. This candle action that we're seeing when we're checking for our cup and handle, this candle action, what it does is it shows us additional information about the accumulation behavior of this metal. So even when price dips and people start to feel like, oh, see, silver was just something people got excited for 3 months and now it's dead. That's not what candles tell us. No, that's not what's happening. It's the opposite. If you're gaining some knowledge and you're enjoying this live stream, every day I host this live stream, 9 p.m. Eastern time. Every day, 9 p.m. Don't miss it. My goal is to break down the silver market in language that you can understand and give you some skills and give you the strategies that we, as seasoned silver stackers, that we use to look at and understand where the price of silver is headed. So that's my goal. I hope you're getting some benefits from this live stream. Let me know in the comments where you are and what time you're listening, because I'm thinking of changing the time that I host this, but I like 9 p.m. It's a good time for me, but you let me know what time you're watching. Now, we're looking for this handle, and we're hovering between that $6 per ounce, which is great, and that's really giving us the handle. And what this tells us is we're looking bullish. We're looking like silver, yes, is breaking the $100 an ounce ceiling, breaking 105, breaking 110. That's the momentum that we're headed for. When the moving average converges or it reinforces any structural tension, then we could see the 20-day moving average. Because from the top of this video, I've been focusing for you on the 50-day, and the 20-day moving average now sits within approximately 5% of that 50-day. And while the 100-day moving average also remains within about 18% of today's spot price, that still creates a convergence zone that spans less than $17. Less. And that convergence across multiple moving averages, when you're looking at all through those moving averages, that tells us that we have equilibrium in the short term, in the intermediate term, and in the long term. So what that tells us is volume behavior, because declining volume during consolidation, it confirms seller exhaustion. Tells us that that's what's happening. But during the late January collapse, trading activity surged. It surged dramatically. Prices were falling from above $118 to below $80 in less than 2 days, less than 48 hours. It was just a correction, really. People call it a crash. I guess we could argue those terms, but it's just a correction. But what that did was that's representing a decline, right, more than 30 or 32%. But since then, average daily participation and declining price, that's been substantial, it really has. And what it's indicated is that forced liquidation has largely subsided. We're not seeing that. What we are seeing is declining volume following extreme volatility, and we're getting signals of transition from really panic. But that resistance, that proximity, that's what determines the breakout probability. It's the cup and handle and the moving averages. That's what tells us that we are set to break out. Silver still remains approximately 25% below that peak, but it's recovered significantly, really, from being down at $76. So we are on our way up. So this pattern tells us that we have a recovery that has established a structural support. That's what it's giving us. And structural support reduces any downside probability. These are all, when we look at these charts and we try to determine where the spot price of silver is headed, it's all patterns. And these patterns really, really tell us everything. And it reduces the nail biting that everybody else is doing, when everyone else really, if you're with me on this live stream, you already have a good handle on the pattern and the market of silver. While everyone else is chasing headlines and looking at Iran in the Middle East and thinking, oh, well, silver price is going to crash because or it's going to bump because this conflict is happening. The Fed is making one decision, so this is going to happen. Really, yes, they're all moving pieces, of course. Yes, and silver is a safe haven for any other market that is showing too much risk. Silver and gold will always be that safe haven. Nothing has changed, even with the correction, or as many may say, a crash. Even with that correction, it's still the safe haven. Gold is still the safe haven. Now, what we've seen with dealer behavior this past week is really what technical indicators already suggest. Dealer spreads, they've widened significantly. They've followed that $40 an ounce drop in January. And that's reflecting increased liquidity and increased uncertainty for dealers. Dealers have widened their spreads because when volatility increases, price discovery, it really becomes unstable. And no one, especially on the local level, can run a business with so much that is unstable, really, that instability. Because stability's begun to return now, but spreads are remaining elevated. And what that tells us is that the dealers on the local level, they're anticipating movement. They are bullish. They're anticipating this metal to go up because that's why they're covering themselves. Of course they have to cover themselves. Your local dealer, they have to keep the lights on. They need to pay insurance. They need to pay rent. They might have an employee. These are small shops. Maybe they have one employee they have to pay. Not a lot, but they have to pay. So they're looking at their thin margins. And if you've ever been to a local coin show, then you'll hear market talk more than any other social media forum. Right? These dealers, they talk market because it's their bread and butter. And they understand all of this. They understand all these moving pieces. They understand candles, charts, just like we all do, because this is how they are figuring out where this price of silver is headed, and therefore, what is their buyback going to be? When you walk in with an ounce of silver, a few ounces of silver, and you want to sell it, you're looking for cash, their buyback used to be $2, $3. Can you believe that? If you're new to silver stacking, that would make your jaw drop. It was $2, $3. Now we're at $10. Same thing for premiums above spot. You wanted to buy silver, it was what? For generic silver, $2, maybe $3. Those days will come back. They will. But right now, this is the new era for silver. Everybody is figuring out exactly where we're headed with this, and they're just trying to get it straight. But it will level out. That's just my opinion. They will level out. Now, focus carefully on this volatility and these metrics, because volatility contraction represents the clearest precursor to expansion. Silver's average daily price dispersion, it has declined, listen to this, by more than 65% relative to peak volatility. 65%. And really, that's reflecting transition from an expansion phase into a compression phase. That's what it's telling us. And compression phases rarely persist. They don't last more than 20 trading sessions. They don't. They will resolve. But when we look at this pattern, what we see is during prior silver expansion cycles, really including that move that was about $11 back in 2020, and then nearly $30, right, when it was really moving, that preceded directional continuation. That preceded the structural compression that represents all that preparation rather than any conclusion. And when this structure is changing, look, silver has now spent 18 consecutive trading sessions just oscillating, just whipsawing, as some call it, within this defined recovery corridor ever since that January drop. And I don't usually use the word whipsawing, but that's how people see it. It's really just oscillating. Now, that's established a classic handle formation, atop of that broader cup structure. That's what we want. That's what we're looking for. And this momentum that we've experienced this past week, that's showing us that no, silver is not inactive. It is not. In fact, just having these trading sessions and having silver end in the $90 range tells some people, oh, it's a psychological ceiling. Money is going to come and that is going to collapse. That's not what these charts are showing us. These charts are not showing us that the psychological $100 ceiling, which that's real. I'm not rolling my eyes at it. The psychological part of this spot price is absolutely real. Ever since we broke $50 an ounce, we're not going back down to 50. I'd be surprised really if we get down to 60. Maybe to touch it for a little bit. But once you break those psychological ceilings, once you break those, it's just the dynamic of the market. So silver is such a strong, such a small, sensitive market. And it reacts with great volatility within that small market because it's so tiny and so small. Once a level or a ceiling like $50 was broken, I believe it's the same, and it's not just my opinion. Look at the chart I'm showing you, the data I'm showing you in this live stream. We're breaking through 100, we're breaking through 105, we're breaking through 110. Those ceilings are going to be smashed. And I really believe that it's coming sooner rather than later, because that is what these patterns are showing us. It's simple math. I mean, it really is. And that's the goal that I have for this live stream. I want to be able to explain to you in as plain English as we can how these charts work, how the silver market is moving, so you know, A, how to keep some cash in your pocket, and B, how to not be so anxious when looking at the spot price and thinking you either made a mistake or you missed the boat or silver's dead, and any of those thoughts that we hear often. Hit subscribe if you have not. I host this live stream every day at 9 p.m. Pound of Gold is the channel. My goal is to help everybody understand the day's market, all the changes that happen in the market of that day. That's my goal. I hope you're getting something from this. And support our sponsor. Money Miles Exchange is holding that contest. They're giving away 20 Silver Eagles. Every month they hold this contest, 20 Eagles. This month's winner was John S. from Farmers Branch, Texas. Last month, remember, the guy never claimed his prize. You got to open your emails from Money Miles Exchange. Since we've been doing this, there have been several months where nobody claimed their prize. Nobody answered their email. So if you click to be in that contest, I'm telling you guys, check your email. Check your email. We send out the winning notification, and if you're not checking your email, we're going to the next person. I'll see you guys on the next one.